Hello, everybody. Welcome to another episode of SimpliFinance. I'm not sure when this one will officially go up. I wanted to mention to all of you at the start of today's episode that I've had some very exciting improvements to the podcast over the last week. And when I say improvements, I really just mean I got on two more guests that I think you guys are all going to love the conversations. One of them is going to add a ton of value. I chatted with a guy named Thorne Murphy, who is essentially a partner at a wealth management firm in Indiana. And my second guest was a longtime friend and one of the guys I originally really got into investing with, named Zach Viaches. And that one is, if you're into wanting a podcast that's a lot more laid back, we're definitely talking more coronavirus, rumor mills, and just chatting, bantering. That one's a little less serious and a lot more fun. Thorns is going to, though, be a little more serious and add a lot of value to you. So those two are coming out. They might be out before this. I probably will try to post these in order, but I'm really excited to get those ones out to all of you guys. So keep an eye out for both of those two episodes coming out soon. So today's Wednesday, May 13th, and the stock market has been on a 3-day slide. If I've been taking a little hiatus of posting podcasts last week. I apologize for that. I didn't realize how much work and time would go into actually, getting the interview type podcast up and running. So during that, the market, though, was doing pretty well, up across the board. And I think really to summarize and what today's episode is all about is I'm just going to rant a little bit about my thoughts on the current state of the market. We're now halfway through May almost. In a couple of days, we'll be halfway. And I just want to give everyone an update of what I think is coming, what I think is happening. If you listen to the two episodes with Thorne and Zach, you can kind of hear a lot of that too. So this is kind of the major theme right now. But I wanted to get on here and just kind of add my perspective. So to summarize the market today, the Dow was down 2.17%. The S&P was down 1.75. The NASDAQ, which has been super hot the last week or so, was down 1.55. And then your boys' index, the Shane index, was getting crushed, down 3.49%. I do want to say, too, if you guys have been keeping an eye on my Shane index, I did, when I originally invested in it, I would walk you guys through what I was buying and how much, so you guys had a idea of the investments that were going into it. I wanted to inform you guys that USO, which is an oil stock, they did what's called a reverse split, which I believe we've talked about on here before. So they technically are out of the index. I didn't own enough shares for them to consolidate. They're just going to end up giving me the cash difference for the shares I owned. So they're no longer in my portfolio. And honestly, they were helping diversify my portfolio a bit. I am now sitting pretty heavy on, and I'm going to look at it, on airlines. Yeah, I have American and United and Amazon and Starbucks left in the Shane index. So what I'm going to do probably over the next week is take a good hard look at, everything I'm looking at and wanting to invest in. And I'm probably going to help diversify the Shane index a little more. So once I do that, that'll be a great episode to kind of walk you guys through that once again and share out the additions to the index that if you want to invest in or follow along, by all means you can. But remember, you take on the risk of any of the investments that you do here. This is just my opinion and my 2 cents. So just want to update you guys on that. That has changed a little bit. So part of the reason why the Shane index is down so much today is because we're sitting very heavy on airlines. So it doesn't help when United's down 9.9% and American's down 5.9% today. So overall, it's been a rough day in the market. Really, it's falling on the back of a lot of kind of dire news. I think something funny, and I work in the food industry full time, and one thing that we've been seeing lately is people are kind of starting to pinch pennies a little bit, per se, and they really are not. We had this like stock up period, if you guys all remember, a few weeks ago, and I apologize, my dog here is chewing on his his ball. Can I have that? I'm gonna let him have it. And so yeah, I apologize. We were stocking up, and a lot of industries, especially like food and grocery, were had earnings through the roof in Q1 because of the stock up that was going on. Can I see that? Thank you. Got the toy. Here we go. All right, we're back. And so what's happened since then, though, is most people stocked up. Everyone's been staying at home, and there's not this freak out stock up that has continued. So now what's happening is people are trying to save money, right? Like there's a lot of people that have lost jobs. There's a lot of people that are just unclear of what's to come. So going and splurging and making sure your house is stocked up with extra cans, you're kind of past that point. And a lot of people are kind of, I think, falling back into some normalcy with shopping and their trips to the grocery store. Now that I think, to be honest, all of us are, weirdly enough, honestly, if 2 months ago, I would have never thought in a million years how normal it would be to walk into a grocery store with a mask on and everyone else is wearing a mask. It's crazy to think how fast that has changed around our country. And so we're seeing it. And so what I think is, I think the market is completely overvalued right now. And I think that because the gains we've seen over the last couple of weeks in the market, for the most part, except companies that are benefiting from the coronavirus, which isn't many, it's, really, if you think about it, it's probably e-com focused companies for the most part, or anyone that's doing, telecommunicating, anything that's directly correlated with all of us being stuck at home. Everyone's business is kind of in a dire situation right now, or it could be in the short term. So I don't understand how the market could continue to go in this direction. I think people thought we saw the bottom, and so everyone started buying back in. I will admit, after selling off a lot of my my positions right when the coronavirus started taking effect, I just wanted to make sure we had extra cash. And in hindsight, we are still doing okay. We both have our jobs. We didn't need the extra cash. In hindsight, it's always 2020, but I would have held on. And I think, after talking to Zach yesterday, I think it kind of hit me that I was like, shit, probably should have held on. But everything in the stock market's a learning lesson. And that's the best thing about investing, and not just sitting on the sidelines and watching, but actually getting in and taking part, is you pick up on things that you're only going to learn by failing. And I think that goes across all parts of life. But in the stock market, where that becomes really apparent is, for me, I sold a lot of our positions to make sure we had extra cash. At the time, that felt like the best decision. Now, looking back on it, depending on what happens over the next few weeks, I definitely avoided losses, but then I also missed out on a lot of gains, and I probably would have been up, if not in the same spot I was before, if I would have just stayed in the market through the downturn. Now, what's the takeaway from all that? The takeaway for me, and I hope the main thing I want to point out for all of you today, is the saying that the time in the market is more important than timing the market. It's a Warren Buffett quote. In my interview with Thorne Murphy, that was a quote he used. It's very common in wealth management. And what that really simplifies down to is, if you're someone who gets emotional in the stock market, this is a most likely and hopefully once in a lifetime situation where we're dealing with this pandemic. And I sold stuff, right? I got worried and I wanted to make sure we had enough cash. So I sold my positions, and I had positions in some companies that I've been holding on to for a long time, and they were down to prices that I probably won't see again. In all reality, I mean, just that's most likely the reality of it. And so time in the market is important. And so what I'm hoping you guys all take away from that is, if I think back over my investing career, my hope is that I don't do this again, right? It's that I hope that I have enough in different areas that I'm comfortable riding out the storm. Unless you're at the end of your life's journey and you don't want to take the risk anymore, then you can always pull risk out and not be involved in the stock market as heavily as I would suggest you be today. And so that's a lesson learned for me, and I hope I hope a lot of you have learned something during this pandemic when it comes to investing. I know for me, I feel like I'm learning stuff every day just by being in the market, testing it, doing this podcast and talking with all of you. It's really helped transform a lot of my perspectives, and I hope I'm helping you through the podcast with that. So that's all I got today, folks. I just wanted to get on here and kind of tell you a little lesson learned, and let's remember this for the next major downturn after the dust settles and the market gets back up. Hopefully I won't have to repeat myself and have this conversation again. So I hope you guys all have a great day. Stay safe, stay healthy. Let's stay, active in the market, and don't let any of this bad news in the media get us down. There's going to be trades to be made any day. So I hope you guys enjoyed the episode today. Like I said, if you go back, I'll post this one last. The last 2 episodes that I uploaded, my second and third interview for SimpliFinance, they were great. They were fun, and I hope you guys enjoy them. All right. Have a great day. I will talk to you guys all soon. See ya.